Welcome to Africa Business Weekly, the show that brings you the latest news, trends, and insights from the continent's business landscape. From the African mining Indaba in Cape Town, South Africa, to Kenya's Smart City initiative that's positioning the country as a technology hub in Africa. We'll take you on a journey across Africa's most exciting business stories. I'm your host, Akin Obake, but I won't be doing this alone. My colleagues Karabo Mashaba and Tabitha Musoni will share with you the stories that are shaping Africa's business future. So let's get the show started. Karabo will bring regional updates from South Africa. Hello, Karabo.
Thank you, Akin. This week, mining industry leaders from Africa and the world gathered at the African mining Indaba to capitalize on the vast opportunities in the continent's mining sector. Key on the agenda was promoting responsible mining practices, fostering partnerships with local communities, and ensuring transparency in the industry. My colleague Fifi Peters spoke to South Africa's Minister of Mineral and Petroleum Resources, Mantashe.
A developing economy must not be bullied around by a developed economy on the basis of its economic status, because if we allow that to happen, then the sovereignty of all developing economies will be run over. It will be run over by developed economy, and I don't think it's a correct way of doing things. Countries must respect one another. Diplomatic channels are meant for engagement constructively. You don't call a press conference to attack a country because it is small. And the African country must resist that.
I think many people agree with you, sir, but I just wonder whether you reckon that South Africa and Africa can go ahead without the US in the event there is a worst case scenario and an economic tool like tariffs is used as a sort of punishment, as it were.
One thing I have studied in my life is marketing. I know that you create markets, you don't end markets. And if you get squeezed in one area of markets, you have a responsibility to develop alternative markets. And therefore the issue of being bullied around is not going to be applicable. What I was saying to the African countries is that we are the home for the majority of critical minerals. Everybody needs those critical minerals. But they think that they can pull us around and force us to do pit to port. They mine raw commodities and take them out and create wealth somewhere else, and we remain poor. We must change that framework. It is time to do so now.
What has the responses been from some of the other ministers on the continent who were here, who listened to you say those very words earlier on, sir?
No, ministers in Africa understand the issue. But they understand that they have a responsibility to take Africa to a new level. It can't be the poorest when it is having the richest endowment of resources. It must use those resources to turn their fortunes around and create wealth for their independence, for their countries and their citizens. Everybody accepts that. The issue will be how. And it will depend on how much do we work together, how much do we actually collaborate and use each other's strength to build Africa as a continent.
In terms of the enabling environment, so how would you assess it? Because you speak to companies, and while there is an appreciation that a lot more value add needs to be done on the continent, there's also a appreciation that there's still shortages when it comes to infrastructure. There's still areas of contention when it comes to policy, and there is still, in certain areas, a challenge when it does come to skills. So how would you assess the enabling environment in responding to investor concerns?
Infrastructure is developed. You invest in infrastructure. If you don't, you will not have infrastructure. Skills are development. You send people to school. You know, China, which we always talk about as a magic, China had no nuclear policy and a nuclear framework in many years. All it did was to send thousands and thousands of their young people to US, to South Korea, to Russia, and brought them back. Today is competing with every one of them in the nuclear space. Therefore, Africa must be able to send people and invest in skilling our people and build the capacity over a period of time. If we don't do that, we complain that we don't have skills and we sit back In 10 years' time, we'll have the same complaint.
But you would be aware, in terms of a foreign direct investment in South Africa's mining sector specifically, it's still not going in the correct direction, sir.
I don't know foreign direct investment. All I know is that coal mining is owned and managed by black South Africans, which is a positive development from where I'm seated. Manganese, that trend is growing. In PGMs, it is emerging. It's more difficult in PGM because deep mining and it requires more capital investment. And my own view is that it's not foreign direct investment that should count. It should be the investment of South Africans and take an interest in the economic activity of the country.
And in more business news, making headlines in the Southern African region, CNBC Africa's Fifi Peters spoke to Zambia's Samuel Mahimbo, who has officially joined the race for the presidency of the African Development Bank. Let's take a look at that conversation.
We're living in perilous times, and now more than ever before, we need a president of the African Development Bank who can focus on getting results for this continent. And I come to this conversation with 30 years of experience in development. Throughout my time in development, my reputation is on achieving results, a laser focus on efficiency, on making sure that we move away from just promises and expectations to actually focusing on delivering the goods for our people. That's what I'm offering, and I am confident that my experience will help make that case even stronger. Of that 30 years of experience, I've spent most of that on the continent, working in every region and visiting most of our countries.
Let's talk about the broader region then, because you are a candidate who is coming to this race with quite significant backing. You do have the backing of SADC. You have also got the backing of COMESA, sir. But how do you plan on soliciting further regional support in the likes of West Africa, where we do know that there is a candidate from Senegal there who's put his hand up in the race, as well as even North Africa, where we know Mauritania also thinks that they stand a chance, sir?
I am laser focused on my vision for Africa, which is to make the case that although Africa is growing, it's not growing at a pace and scale that will make sure that we are lifting the continent as a whole. And in that conversation, focusing on jobs means creating opportunities in both traditional sectors like agriculture, but even the more recent sectors like the creative industry. Making sure that the African Development Bank is the institution that is the first port of call for every government. We have the team, we have the network, we have the resources, and scaling up significantly that volume of resources so that every government feels this is an institution you can come to get the best policy advice, the resources you need, the people and the partnerships to deal with some of the complex problems that we face today. There are a lot of governments who know what the problem is. They know what needs to be done. But in an environment where you're competing with high debt levels, a fast-changing climate environment, a demanding population, a very youthful population, sitting down, rolling up your sleeves, and doing the work that will not result in you cutting the ribbon, but transforming the fate of countries and nations, that's what excites me. And I hope that this will continue to be a battle of ideas until the continent chooses the next president of the African Development Bank.
I still got some time to go, but let's shift focus to how you think your chances do stack, sir, in terms of the non-regional shareholders of the bank, because as you would know, you would need a double majority here on the continent as well as externally to ultimately get the presidency. How do you rate your chances?
I rate them very highly because of the work that I've been doing over the last 10 years. Working in global development, when I was leading the IDA 20 replenishment cycle. This is a time when the world was facing COVID, when countries were cutting national budgets. The work that the team and I did to negotiate $93 billion meant a lot of time spent with the non-regional countries around the world, negotiating through very complex, limited financial options, re-engineering IDA to make sure that every dollar we received, we were able to leverage 3 times. I have had multiple conversations, and I am going back to that same environment to have a conversation that frankly excites me, because this gives me an opportunity to focus on the Africa region 100%. And that's the work that I hope both regional and non-regionals will get excited about. I know we have a tendency to cut up the regions that we work in, but frankly, we're in such an environment now where concessional finance is limited. We have to approach things differently. We have to take a new approach to execution. It's one built on partnership. The World Bank had a fantastic replenishment for IDA 21 of $100 billion. I want as much of that to be spent in Africa as possible.
And that wraps up News Driving, the Southern African region. It's back to you, Akin.
Thanks for the update there, Karabo. Tabitha Muthoni is on standby to bring juicy content from the eastern part of the continent.
This week, among other major developments, we spoke to Celestine Rwabugumba, CEO of the Rwanda Stock Exchange, as Rwanda's capital market continues to play a crucial role in helping SMEs and corporations raise a long-term funding. With the success of initiatives like the investment clinic, more businesses are leveraging the exchange to access capital for expansion. CNBC Africa's Eric Shaka had more with the CEO.
This initiative is somewhat storytelling, an example of, telling the story of one of our most recent graduates from our capital market investment clinic. It's an SME company that came from nowhere to somewhere for expansion. So a company that has a good track record, history in the agro-processing business in Rwanda, that has passed through our mills, our ecosystem of the capital markets, through our investment clinic, and then they graduated to the point of where now they have been able to use the market, the capital market ecosystem, and managed to raise money to expand their business. And so now the reason why we came here was to see for ourselves what the money has done and what kind of example they can give to others in future who are doing business in Rwanda in the SME market segment and other corporates who may wish to look for expansion capital with alternative financing mechanism for their business for expansion mainly, because the available financing in Rwanda is traditional banking and a few others, but the capital markets also can be an avenue for also SMEs. So we want to show the story and show investors out there, show entrepreneurs out there, and other people who are dreaming to know that the capital market is there to be able to accompany them to hold their hand up until they can be able to expand their businesses.
Yeah. Now, RSE has been trying to attract SMEs to list at the RSE. How is it going so far?
Well, the RSE has been working with SMEs for listings, but this particular case, it's not about listing, because you see, we know the stock exchange, we have different market segments. We have the main market segment, we have an SME market segment, we have a fixed income market segment. Now, actually, we have now recently also introduced the REITs and the ETFs. All those are different market segments or different asset classes people can look into if they want to raise money or if they want to invest. So now, when it comes to SMEs, because we know the nature of SMEs in Rwanda, we've created that market segment to accommodate them, and by lowering some of the requirements to come to the capital markets. So now, with that, they need preparation. So this investment clinic we've created is to support some of those SMEs which need guidance and hand-holding until they can be investable. So it's not really about listing as such, but it's about them getting ready to raise capital at any level of their development.
There were more developments as we now shift focus into Kenya's Smart City initiative dubbed Konza Technopolis, which is well on course to position the country as a technology hub in Africa. President William Ruto's government last year signed a letter of intent with the US government, a move likely to draw in the big tech American companies to invest in the venture. CNBC Africa's Abi Agena spoke with the CEO, John Paul Okwiri. Let us listen in.
As Konza Technopolis, we have been able to do several basic infrastructural work and projects that have now been completed. We've been able to finalize the phase 1 horizontal infrastructure, which is a state-of-the-art project that included streetscape, wastewater reclamation facility, water treatment plant, solid waste management system, power substation, all the internet connectivity to all the parcels, stormwater drainage system, and all the amenities that investors would require in investment in the Technopolis. We've also been able to complete the establishment and the development and establishment of Kenya Advanced Institute of Science and Technology, which is our anchor tenant in the Technopolis. It's a university that offers science, technology, engineering, and mathematics at graduate level. And it's a university that will be able to provide linkage for the academia, the government, and the industry in as far as ensuring that the innovation ecosystem and knowledge economy is developed in this country. Therefore, we've been also been able to complete the construction and development of National Data Center, which is a state-of-the-art facility, and it is uptime certified. It's a Tier 3 national data center that is going to lead to provide the foundation for our country to transform into a digital economy. We've also been able to complete investors onboarding into the Technopolis. In the first one in development which we've done, we have 147 parcels, that is parcels of land, and we've been able to allocate over 100 of parcels to various investors. You know, Konza Technopolis, our mandate is to provide the infrastructure to attract and retain investors, and also to develop an innovation ecosystem that will be able to contribute to our knowledge economy.
All right.
Therefore, in all those fronts, we've been able to lay the necessary foundation to ensure that Konza Technopolis is now ready to take off. Our government has been able to do the necessary infrastructure that investors would ordinarily need in order to establish the investment.
All right.
Now we are at the phase where we are mobilizing the investors to be able to start construction work so that we can have the investors put in the necessary capital for investment.
That's it from East. Back to you, Akin.
Interesting conversation there. Many thanks, Tabitha. In more development from the continent, the Mission 300 initiative projects that about $90 billion will be needed to connect 300 million Africans to electricity by 2030. New pledges of about $8 billion were secured from lenders at the summit in Dar es Salaam. The Rockefeller Foundation's Mission 300 Accelerator is a unit that has been set up to drive the efforts of the many partners working together to advance the World Bank and African Development Bank's ambitious commitment. Headed by Andrew Eskowitz, who is in this interview, discusses the outcome of the summit and future plans of the initiative. Take a listen.
It was a really exciting week last week. We saw 25 heads of state come together in Dar es Salaam, along with other world leaders, including the presidents of the World Bank and African Development Bank, heads of philanthropy like Rockefeller Foundation, and made over $50 billion of commitments to helping 300 million Africans get access to electricity by 2030. It's a massive, unprecedented undertaking, trying to do something at a rate that's never been done before. But we've learned a tremendous amount over the last decade. We've never seen this amount of money come forward to try to make it happen.
Right now, the real work now starts now, and I'm trying to imagine the work of the M300 Accelerator and what the scope of work is going to be over the couple of years.
Sure. Well, the World Bank and the African Development Bank have an existing portfolio and pipeline of 130 projects already across the continent that give a clear roadmap to how we're going to achieve this 300 million. We all know that those things can get derailed, and that's what the role of philanthropy, like the Rockefeller Foundation, the Global Energy Alliance for People and Planet, which is focused on universal energy access, and sustainable energy for all, have all come together to support the World Bank and African Development Bank in this effort, along with other governments as well. So originally it was these 5 partners, but it's a much bigger tent. We need everybody's help. We saw the Islamic Development Bank, the AIIB, the French government, the Italian government, the OPEC Fund for Development, all come in with massive financing commitments. But now what we need to do is we need to put our noses down and we need to do the work. making sure that we're giving governments what they need. Do they have the people and the resources to execute on these projects? Because ultimately, this is an African-led effort. We saw 12 governments sign energy compacts. We saw 25 heads of state sign on to an all-Africa declaration, making commitments to a lot of the reforms that are necessary to bring in the private sector investment. This doesn't just work with the World Bank and African Development Bank and philanthropies. We need that private sector investment. We need multiples of private sector investment. What we can do as public institutions and philanthropies is help bring down the costs associated with the projects. That would then encourage private investors to come in. The governments also have to keep doing their part to make sure that they're friendly investment climates and that they have the laws and the regulations in place to make it happen.
Yeah, because I would like to hone in on that a little more, because you are actually hitting the nail on the head here in terms of what we're seeing first with the funding commitments on one hand, and then also the role of the private sector. And it's very critical that we get to see the private sector heavily invested in this as well if you're going to get the electrification targets on board here. But, you know, what incentive would you say in place to attract more private capital into this initiative?
So the incentives are the fact that the World Bank and the African Development Bank, they're bringing $30 to $40 billion of concessional financing. This is unprecedented. It's really low cost financing. In some cases, it's grants, but making sure that it's targeted towards some of the lowest income countries in the world. When you look at the countries that signed the compacts, they weren't the biggest economies. They were some of the smaller economies in Africa, the ones that often get neglected. And what they need is low cost financing. We've been hearing all of these calls from the global south that we need to change the global financial architecture and provide these countries with the types of financing that they need in order to develop. And that's what we're doing with Mission 300. Mission 300 is really shaking up the entire global financial architecture by providing incredibly low cost financing coupled with grants to try to bring 300 million Africans access to electricity. And it's critical that we have this low-cost financing. There was a recent study that found that 78% of the people who don't have access to electricity in Africa can't afford it. So what we need to do is we need to bring the costs down. We need to make electricity access less expensive, and there's a lot of ways that we can do that. And we also need to help lift incomes as well. So Mission 300 is also about creating the type of jobs that are driven by electricity. It's about making sure that Africa's economy is going to be growing over the next several decades. We have to keep up with job growth. We have to keep up with a growing population, and then electricity access is the key input to making sure that that happens.
In other developing stories, the Nigerian Labour Congress suspended its planned protest over the 50% tariff increase as the government agreed to set up a broader committee with 5 representatives from both sides to ensure a fair and inclusive agreement in 2 weeks. Gbenga Adebayo, chairman of the Association of Licensed Telecommunications Operators of Nigeria, joined us to discuss the tariff increase and its implication for the future of Nigeria's telecom sector.
We saw the outcome of the meeting between the federal government, our minister, our regulator, and as well as the organized labor group. We saw the outcome of their meeting last night, and we are pleased that we have now government intervention in that regard, and government now trying to mediate between all the parties to be able to see how best the situation can be absorbed by everyone. It's cool that there is a 10-man committee in place comprising people from both sides of the divide. But the fact remains that as an industry, we didn't do anything outside the provisions of law. The Nigerian Communications Act 2003 allows that we make representation to the Nigerian Communications Commission, NCC, asking for price review based on economic indicators. And the NCC has a duty to conduct market study, the outcome of which they will use in determining what is the minimum base price, what is the highest band price that any operator can charge. And in the process of this, we have fulfilled all laid down procedures for price review. And thankfully, we did ask for 100% plus, but government granted 50%, which according to them is to balance market demand, market forces with affordability and sustainability of the sector. And so in that regard, I think what we have seen with the outcome of the meeting yesterday is progressive. It means that parties are now going to look at the issues much more than before. Organized labor said they agree because they are not part of the conversation. And really and truly, in the scheme of things, our line of communication is with government through the Nigerian Communications Commission. We don't have a line of communication with the trade unions. And therefore, government does do have a right to discuss with all the parties. They are doing so now, and I think it's in the interest of everyone. What we must keep in mind is that our points of emphasis is in the sustainability of the sector. Because even for there to be some reaction from the labor unions, it has to be that this institution remain active. If you have a sector that is collapsing or that has collapsed, there will not be any basis for any agitation again whatsoever. And therefore, our concern has been on how the industry will remain sustainable and how we can continue to deliver services to all people and all persons at all times, including members of the labor union. And so I think it's a fact that we must keep in mind. I'm glad hearing also the chairman of the Nigerian Labour Congress yesterday. They do understand the fact that yes, they need to have a review of price. But the question then is, what quantum of review should we have, given that we haven't had any price review in almost 12 years.
It's good to see sustained engagements play out here. Now we see a broader committee in place here, and which has, from the labor side of the labor unions, is a case of representation in the process. Yep. They want to be involved there. But I'd like you to speak to that and also the timeline. Yeah, 2 weeks, and what can we expect in this 2 weeks?
I think we must keep in mind that we do not have a mandate to seek the concurrence of the trade union on price matters. We must keep that in mind. And therefore, there are requests for having to be part of a conversation. We don't see it. We don't have that line of communication with them. And so the regulator is our regulator. Regulator represents government in this regard. And so government at the highest level has called them to a conversation. It's not to say that the president is misled. We must keep that in mind. Tariff issues are commercial issues, and they are best left for market forces to determine. So we need to be careful on who is involved when it comes to matters of tariff. But however, we are not unmindful about the economic problems of the country.
But that's all we can take in this week's episode of Africa Business Weekly. Special thanks to my colleagues Karabuma Shaba and Tabitha Muthoni. I'm Akin Obakeye. Do enjoy your weekend.